Hey, good morning, everybody. Welcome to Wednesday, October 28th. I hope that your week is going well. Yesterday was quite the slide on Wall Street. It was mixed results, but for all intents and purposes, the Dow and the S&P were down um, uh, somewhat more than expected. So, and today, the big news, more coronavirus, not lifting the markets, but crushing the markets, looking like it's going to be a rather dismal day on Wall Street. So, hey, Dave and I will have that discussion here. Stay tuned because he will come up next.
5.7 Light FM. Faith is Hill. Faith Hill is there. It's my daily dose of faith. Keep a picture in my office. Still got a schoolboy crush on her. It's 8:40 now. 20 before 9. Time to check in on your money and find out what's going on Wall Street this morning. Phillip Statler is online with us from the offices of Statler Financial Services in downtown Sebring. And Phillip, it sure looks like a bloodbath today on the equities market, doesn't it?
Yeah, it really does, Dave. It's and no news is helping us. It doesn't seem like the only news out there seems to be, COVID getting worse and worse, not just here in the United States, but in Europe too. There's big concerns about more shutdowns, more stay-at-home orders in Europe, which is really, I think, causing some issues over there.
Oh, yeah. France is shutting down. Great Britain is doing neighborhood shutdowns. Boris is trying to keep these measures local, but still shutdowns right and left over in Europe. And we've set 2 new case records in the United States over the last few days. If anybody was living in a hole lately and didn't realize it, this puppy ain't over yet, is it?
No, it's not. I read an interesting article, though. Hey, do you want to get out of the United States? Do you want to go someplace that's got less COVID than we do? What about the Cayman Islands?
Where?
Cayman Islands. They have set together, if you make over $100,000 a year and can work remotely, they'll allow you in the country. If it's a husband and wife, you got to do at least $150,000 a year of income, and they'll let you in the country. You can get this certificate. You can stay for 2 years and work remotely. They've only had 229 cases thus far, 1 death, and so that's a marketing tool because they're not open to tourists right now.
If I made $150 a year, I'd say that's almost a tempting thought, isn't it? Lordy gosh, everything's looking terrible. I mean, starting about the middle of the night, the futures, after not a good day yesterday, the Dow was down 222, NASDAQ down 72.5, or up 72.5, and the Standard & Poor's was down by 10. Starting about the middle of the evening, futures just tanked, down like 400 points on the Dow futures, basically as realization set in that the COVID situation worldwide just generally is El Stinko at the moment, and it's got investors in a really foul mindset this morning.
It really does. I mean, we're seeing some massive declines. I mean, we had those same things on Monday, right? So yesterday was a little bit of a I thought for a minute it's going to be a little breath of fresh air, but then towards the end of the day, we got some red ink on the Dow and the S&P 500. But today, there's not a sign of green ink anywhere. I mean, anywhere, Dave.
I'm pretty much looking at just about everything, and my computer screen is virtually solid red this morning. We start out the morning with one of those things that in normal times would be considered good news, but this time around, we're going to probably take it as bad news. Our trade deficit is down. Exports went up by 2.7% last month. That's good news. We're selling more overseas. Imports went down by 0.2%, which would normally mean we're buying more U.S.-made goods. Everything should be coming up roses with a report like that. But in the light of the current health statistics information, that basically means our local consumer demand is kind of El Stinko, which the Wall Street traders are taking as crummy news this morning, I'm assuming.
That they are. Yeah, it's definitely none of that has helped the futures at all. A matter of fact, they have continued to worsen as the morning has progressed.
Hey, geez, yeah, and I'm noticing that the flight to safety is taking place in droves as well because one of the red ink numbers is the yield on treasury bills, which means people are buying them like chiclets because it's better to have your money go nowhere than down. So it's one of those days in Wall Street, and until we get the news on a vaccine or some good news on the virus, it's probably going to be that way for the foreseeable future.
Oh, absolutely. I mean, we know that stimulus is out the door now for a while. And so there's no keeping your eye on that ball. So now the only thing people can watch is the vaccine, the coronavirus, and how that progresses. But I did see another headline that gives me some concern, and that's mortgage demand barely had a gain this week. And I don't know. I mean, there was the article, was basically kind of poking that, maybe people are stop buying and slowing down that process. But at least here in Florida, I wonder too if it's a lack of inventory, because I know here, at least in our local community, inventory can be slim to get to find the right house that you want to buy. But either way, it's something I think we need to keep our eye on, because it could be a forecasting number that things are going to slow down the real estate market.
Well, my fingers are crossing that your guess is right, that it's supply. I mean, out on the golf course yesterday, it was almost hard to find a vacant lot there wasn't a bulldozer flattening land on, and that indicates, at the very least for the moment around here, the housing market is pretty good.
It is, and it would be nice for us to be on that upswing for a long period of time, because usually we're on that short end of that stick.
Yeah, we have a tendency, something happens on the coast, it happens 2 years later in the middle of Florida. So if we can keep the momentum going and a dip can be delayed along with the rise, that'd be kind of nice. Earnings season continues, and we got some household names that reported, and well, there's some good news, but there's probably more bad than good looking at the snapshot I saw this morning.
Yeah, that's the truth. There's a few little glimmers of good things in there. But let's start off with Boeing. They've been in the news a lot the last couple of years, and not for good reasons. But they lost $1.39 a share. However, that was less than expected. They were expected to lose like $2.52 a share. So revenue came in ahead of forecast. But let's don't forget they're still having some issues there. They're gonna probably reduce their workforce by about another 11,000 employees over the next year. So that's no small amount. They're trading down about 1% today after falling 3.5% yesterday.
Geez, and that's actually beating the street off their report. That can't be
Exactly.
good news.
Yeah. Let's talk about General Electric. General Electric's just been one of those things. It's been kicked to the curb. It's not the same General Electric that you and I knew as we were kind of growing up. They're slimmed down, trying to find their way and figure out what they want to do when they grow up. But they did have a pretty good quarter. They beat by 2 cents a share. And they were only expected to make 4 and they made 6. So that's a pretty big jump for them. Revenue was ahead of estimates at all also. So they've been able to cut costs and conserve cash, which is always a good thing for them. And they're getting a nice boost this morning. They're up almost 6%.
Cool. Yeah, I'm showing them as going toward the top of my big winners list. What do they do anymore? Jet engines and locomotives, don't they?
Yeah, I think that's about all they still do.
Yeah.
I could be wrong, but that's the main thing that comes to mind for me.
Yeah, I can't think of a doggone thing on the consumer front that General Electric still makes. Like you say, they've been shedding all of their divisions right and left, trying to save the company and figure out what they want to do when they grow up. And you figure jet engines and locomotives are probably not growth industries right now.
No, definitely not right now. That's for sure.
Yeah.
Hey, we talk about retail, we talk about inventories. So let's talk about MasterCard. MasterCard missed earnings today. They missed by 5 cents a share. They came in at $1.60. But I dug a little deeper for them year over year. So third quarter last year, They made $202.07 a share.
Mm-hmm.
So compare that to where they are today. Kind of a miss there. They made about $3.8 billion of revenue, which was about 1/10 of a billion less than expected. And last year for that same time period, they made $4.5 billion. So we can see that this year's definitely not as good as last year. And they're getting beat up pretty big today. They're down 4.75% today. They'll open right now at about $302 a share.
The top line story I saw on MasterCard was they were blaming it on a shortfall on travel spending, which probably shouldn't surprise anybody, but all the major cruise lines are even ahead of MasterCard on the big losers list this morning as they read the MasterCard report and say, whoa, Seabiscuit, get me out of the cruise line stocks.
Yeah, well, yeah, that's true. And well, I think the other thing about cruise lines, Dave, I mean, there's no earnings for them today, but I think the newsworthy is that the CDC will issue their whether or not they're going to allow cruising because it expires October 31st. So I think there's some concern that they're going to extend that.
I was going to say nobody expects anything but an extension on that one.
Yep. So, hey, let's look at some good news. How about UPS?
How are they?
They did well. They came in about 38 cents ahead of estimates at $2.28 a share. Revenue was ahead also. Obviously, they've benefited from people staying at home and sitting on Amazon, hitting that button to order all the day long. But they're trading down this morning. Not sure why. I mean, we're heading into Christmas. Not sure exactly what the deal is there, but they're trading down a little over 2% this morning.
Geez, nobody wins, even when they do well this week.
Well, and there's a lot of that going through the system. But I do have a couple that are bucking that trend a little bit. And one of them's Garmin. Garmin, you know, they've people that want to do outside stuff, that seems to be doing good for them. Boating and outdoor activities has been their high point. And so they had a pretty big beat for the quarter, and they're trading up almost 2.5%. And get this one. How about Tupperware? Do you think Tupperware would be doing well right now?
Tupperware, in a day in which people have margarine containers stuffing their things, I've always thought of Tupperware as almost being a thing of the past, but I've got a couple of friends that sell it. They say they're doing pretty well.
They did very well. They came in at $1.20 a share. They were expected to only make it 37 cents a share. So a big beat for Tupperware. Obviously, people are staying home. They're cooking more. They have leftovers. You got to put those leftovers somewhere. And so that's helping Tupperware and their sales. So they're up. I'm sure they're not on your big winners list, but they should be. They're up 22.75% this morning.
Holy crud. The
Yeah.
people that assemble my big winners list, probably their bull crud detector went off and they deleted it, right?
A good possibility.
Recapping yesterday, mixed bag, but the Dow was off pretty crummy, and the Standard & Poor's was also off yesterday. NASDAQ eked out a win yesterday. I got a sneaking hunch we can't even find one of the indexes going to be green at the end of the day today based upon early season looks. 45 minutes early. What are we doing, Phillip?
Yeah, Dave, the only thing I have green right now is the VIX, the volatility index. So that's it. Everything else is blanketed red and progressing, getting further down that road. So we got the Dow 30 down right now, 2.25%. That's $614. The S&P 500 down 1.9%, which is almost $65. And we've got the NASDAQ down 1.6%, about $183. So everything's massively in the red there. And it's not a whole lot better on the commodities front. We got silver down 3.25%. That's 80 cents an ounce down to 23.76. We've got gold down 1.5% to $1,882. And crude oil is not helping us any either. It's down 4.6% to $37.73 a barrel.
Oh, wowzers. What the heck did you guys do when I took a day off?
Man, that's what happens when you go golfing.
Yeah, I think so. Overseas markets not a whole heck of a lot better. Asian rim markets were off fractionally at the close. Europe's taking a look at what we're doing today and saying, get me the heck out of here. Great Britain and Germany are both down well over 2% midway through their day. And I have to make note of the interest rates on Treasury bills. 30-year bonds are down by 5 basis points as I look at them. 10-year bonds also down by 5 basis points. There's a flight to safety going on that might be for the ages today. Phillip, you can't control the virus, and that means you can't control the risk. You can't control what happens to your portfolio. You can only control the risk of that drop in there. How do I get a hold of you to find how much risk I got?
You know, Dave, when the market was going up, you and I were telling everybody, now's the time to look at your portfolio to determine how much risk you have in that portfolio. And I want to let people know it's not too late. And we've seen some major declines, but it doesn't mean it's too late to get an x-ray of your current portfolio to make sure that it's not time to make some shifts out of risk into safety. Give me a call to go through that process, 863-382-0037. Catch us online at statlerfinancial.com. I think we got some webinars actually up there now where you can register for those coming up here shortly. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
And back here tomorrow morning, hopefully with much better news than we have this morning here on Light FM. Fair enough?
Fair enough, man. You have a great day, and we'll give a report in the morning.
Thank you, Phillip. I appreciate it. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Everybody, remember what I said. If you've not taken the time to look at what you've got in risk in your portfolio, it's not too late. Give me a call, 863-382-0037. Go to my website, statlerfinancial.com. There's a link there. You can click that link for a 15-minute phone call. But don't put it off. The volatility is not going to get better. It's only going to get worse as we get through this election time cycle. So give us a call. Let's go through that process. Hey, have a great day. I look forward to speaking to you again tomorrow.